The Best Brands Morgan Stanley Global Selection Fund launched in 2008. It's an active global equity fund diversified by region and sector with a long-term capital growth objective, where asset allocation, equity risk on and risk off is managed very actively. The investment process uses a combination of top-down allocation and is combined with bottom-up security selection. The fund's portfolio manager since inception is Andrew Harmstone. A key top-down call is the equity overall exposure, which ranges from 70 to 110%. The PM also has the ability to tactically adjust the portfolio to reflect preferred style factors and sectors, and also has at his disposal a strong stable of Morgan Stanley equity funds. A key building block is their flagship fund, the Morgan Stanley Global Opportunities Strategy, which invests globally in secular growth companies. This strategy is maintained at a 35 to 50% level in the portfolio. The Mediolanum fund has been a strong long-term performer, and 2020 was a standout year, where the fund did a good job of cushioning market depreciation during the equity down market in Q1. To give more details, Andrew reduced equity exposure at the beginning of 2020 as markets became volatile, and further reduced it during the height of the pandemic volatility as a protective measure. Importantly, he materially added back to equity risk exposure in the fourth quarter, which allowed the fund to buy equities at lower valuations and accelerate the gains generated by the very strong market recovery. The Global Opportunities Strategy was the biggest positive contributor, with the two largest allocations in information technology and consumer discretionary around 21% and 18% respectively, delivering strong performance, followed by communication services at 11%. There was positive contribution also from stock selection in these sectors, in companies such as Zoom, Meituan Dianping, a Chinese social platform, and Spotify Technology as examples. Elsewhere, Andrew has added some margin exposure to more cyclical areas of the market, such as financials and energy, towards the end of 2020, as the opportunity offered by value companies became stronger and the global economy showed signs of recovery. As a result, because of the growth sector allocations of the Global Opportunities Fund, Andrew reduced exposure to this strategy to the lower end of its 35 to 50% range. Overall though, Andrew maintains a very positive view over the medium to long term, while being somewhat cautionary in the short term, and has consequently reduced equity allocation in the fund by circa 10% to 80% as of mid-March. In fact, while the global economy, in particular the US economy, is poised to see a strong recovery in 2021, if it proves to be too good on the employment front, it could lead to bond yields rising. And this potentially could bring the Federal Reserve to act by tightening monetary conditions and leading to some volatility. So this scenario, combined with the strong performance obtained in some parts of the equity market over the last 12 months, has led Andrew to moderate slightly the growth style exposure of the fund. We believe the flexible approach of this fund is a key differentiator to more traditional equity-oriented products, which tend to be fully invested irrespective of the market environment. In addition, the PM brings a lot of experience in this asset allocation aspect. Another key benefit is the exposure to top-performing flagship equity funds of the Morgan Stanley range, which have long-standing and highly experienced PMs, particularly in the field of growth investing.